I'm actually quite optimistic the longer term future for like natural valuable gemstones like natural diamonds. I think there's going to be a resurgence, getting more and more digital. People are going to crave natural things. I think a diamond or like a natural gemstone is like a great way to, carry a piece of nature. I think you literally have to exercise your brain just like you have to exercise physically. I think you have to exercise mentally. If you're relying on AI to write for you, it's going to be very difficult to develop good speaking habits. It really is just like it's supply demand. If people want it for whatever reason, you could argue that gold shouldn't have any value.
Today, I'm sitting down with Paul Zimnisky, one of the global diamond industry's leading independent analysts. What makes Paul's perspective so interesting is that he came to diamonds from Wall Street. He brings a rational economic framework to something fundamentally human. Why we desire things, why we assign value to them, and why some things remain valuable while others don't. For more than a decade, Paul has studied the forces shaping the global diamond market. And right now, diamonds are a fascinating case study in what's happening across luxury. Technology is challenging traditional ideas of scarcity. Lab-grown diamonds have introduced an entirely new supply dynamic. AI is changing how products are designed and created. And as more of our lives become digital, Paul believes we may actually place greater value on things that are natural, scarce, and real. Paul and I talk about the economics behind natural and lab-grown diamonds, whether diamonds can truly be an investment, and what actually creates lasting value. This conversation is really about something much bigger than diamonds. In a world where almost anything can be replicated, what becomes truly valuable? Here's Paul Zimnisky.
I'm Paul Zimnisky. Welcome to Responsible Luxury.
Paul, I feel so grateful and I feel very fortunate to be having this time to sit with you here today because you are one of the most trusted and leading voices in the diamond industry today. And what I find most fascinating is that you came from Wall Street, of all places, as an analyst focusing on precious metals and mining companies. So take us back to the beginning and what initially led you to diamonds, and what's something that you saw in the market that people weren't talking about?
Yeah, thanks for having me. So I traded on Wall Street, and I was pretty good at that. But it's like these huge adrenaline surge and crashes over short periods of time, and it's very emotionally exhausting. And you can make some good money, but it's not really that intellectually rewarding. And then you can kind of be an analyst, you can kind of analyze companies and kind of have work towards maybe a longer term kind of investment strategy versus a shorter term trading strategy. And I always liked the analytical side of that industry so much more. I just always liked economics and geopolitics and international business and I always thought it would be interesting to kind of look at all those through the lens of one specific industry. And diamonds really cover all of that. It's a very it's a very diverse industry. It's very spread out throughout the world. It's based on consumer sentiment and consumer behavior, and there's all these different aspects that make it relevant to whatever's going on in the world. I mean, you just go back the last major 5 or 6 events in the world, and they directly impacted the diamond industry in every way. I mean, from the war in Ukraine, there was sanctions on Russian diamonds, and we had the tariffs, and that directly impacted India, and that's where most of the diamonds are imported into the U.S. And it's now with the war in Iran, surging oil prices, that's really, hitting the mining companies. So it's everything that's going on in the world, in one way or another, it's kind of, impacts the diamond and the jewelry industry. And I kind of like that about it. I find it interesting. It's kind of cerebral, in that way. And it's also a very, historically, it's been a very opaque industry, and I kind of found that interesting. For an outsider to find information about the diamond industry in particular was traditionally very difficult. Maybe it'll be easier with AI now. So I think I kind of liked, all of those aspects. But, so as an analyst, I can cover anything. It doesn't need to be one specific industry. You can kind of use the skill set and kind of transfer it to other industries. And I like the uranium industry, I think is interesting. I like the fertilizer industry, the potash industry. Right. I like the waste management industry. So these are different industries, but you can kind of use the same skill set, and kind of apply that to other industries. So if I get sick of the diamond industry, I could switch, but it hasn't happened yet. So I've been doing this for over 10 years now, just covering diamonds. And so, I mean, I'm independent, so I don't really report to anybody. And the whole idea is to just be as objective as possible and just kind of say what's going on.
As truthful, as transparent.
Yeah, and that I think that's valuable, for a lot of people. And I think you kind of have to be independent to be able to kind of deliver that. And
100%.
it's easier when you don't have to like sugarcoat anything, or you don't have to kind of spin
say
it.
things through a filter and can say what
Yeah,
you want.
right.
because
And I think
it's
like
the
I think
truth.
so much of life has turned into that, unfortunately. So it's actually, I find it like really easier than if you had to kind of spin it. So
Right.
I guess for all those reasons, I kind of like it.
If you were to try to explain the diamond industry in one sentence to Wall Street guys,
Yeah.
how would you describe it?
Um,
Because you're right,
I mean,
it is
I-
such an interesting industry. And
Yeah, like I probably don't have like a fancy answer. I mean, it's a luxury industry, right? So it's
Yeah.
driven by consumer sentiment. It's not practical. It's not rational. Like people don't buy diamonds and jewelry for rational reasons, right?
Right.
And that's why, there's the price points are so wide, and there's so much debate about like say like lab-grown diamonds and how much they're being sold for, right?
Yeah.
Relative, to what natural diamonds have sold for, given that they have such different supply fundamentals. So, I mean, that just creates another layer of complexity that makes it really interesting for an analyst, right? Because that consumer, behavior, that portion of the model, if you will,
Yeah.
it's like you're never going to find like a perfect explanation or answer to it. But that's kind of what makes luxury kind of special. It's not practical. It's
Illogical emotional drive for desire of products to collect and to own. Right?
Yeah, and it's like it's obviously it's a very with diamonds like historically it's very romantic
Right.
product for a lot of people. It's very emotional, and I think that makes it fun to cover as well.
I want to get into structure for a bit. Coming from the precious metal industry, I want to talk about just certain infrastructure that gold has had historically too, and thinking about more what's almost missing in diamonds, because I was looking at pricing history of gold, and you look at because you did also work with an ETF that you launched
Right.
in the past, and you look at when gold first launched its ETF back in 2004, the price of gold at the time was like $300-400. Now today I looked, it's like $4,500, and I'm curious why gold now is so respected as an asset. Is it because, do you think it was historically because of the launch of the ETF, which allowed investor access to participate in the asset itself without actually physically holding gold? And why not diamonds?
Yeah. So I mean, gold has always been probably the most respected, financial asset, if you will. I mean,
Yeah.
back to the U.S. dollar up until the 70s, right? So every U.S. dollar was actually backed by gold, right?
Right.
So
Up
I mean,
until was it like
the
1970?
70s, right?
Yeah.
So there's a very deep, long historical connection there that
Yeah.
goes way back. The biggest difference between diamonds and gold is gold's fungible, trades on a per ounce basis, right? And you kind of refine it to 0.999% purity. With diamonds, you have all of these different categories. There's
Thousands of characteristics.
maybe 10,000, like when you factor in all the different shapes. And with the rough, they come in all different shapes, and the color and the clarities and all the different characteristics. Then when you polish it, there's a whole other realm of
If I had
different
gold in
shapes.
my pocket and I gave it to you, and you exchanged it for a piece of gold in your pocket, it's the same. If you had one
It's
diamond in your
fungible,
pocket,
right.
I wouldn't want to give you my diamond because it could be very different than the one that you're
Right.
holding.
But even that, like this day and age, like owning gold, like physical gold, it's just not that practical. Like if we did finally get the apocalypse, like it would be very, very difficult
Right.
to trade gold, because again, you don't know if it's filled.
You can airdrop your gold to pay for things if we ever need to. I'll just say.
We're kind of so far beyond that in like the digital realm, where like the physical bartering of anything is going to be really, really difficult.
Yeah.
If it ever gets to that again. But again, I think historically there's just been such a close correlation to say inflation in the gold price, for instance, right? So the price of gold has historically tracked with inflation very, very well. Stocks have, if you just look at like large cap US stocks, that has actually outperformed on an inflation basis. It's been a better hedge than gold, but most people consider gold like the best inflation hedge, and it actually does correlate to the cost of mining. So right. So it's like the if the price of fuel goes up, or diesel fuel goes up, or the price of Caterpillar construction equipment goes up, the cost of extracting gold goes up as well, right? And that actually should reflect the price. The price of gold at the end of the day. With diamonds, we're actually kind of having the opposite, where diamonds have been disrupted by manufactured diamonds, lab-grown diamonds,
Right.
and the cost to produce natural diamonds continues to go up, just as the cost to produce gold continues to go up. And And it's really kind of wreaking havoc in the natural diamond industry right now. We can talk about that in a little bit more detail. But at the end of the day, with like most of these commodities, they should be somewhat tied to the cost to produce them. And gold is probably the best example of that. And that's historically why people have always had this affiliation with gold and say store value or even currency.
When we look at pricing history of diamonds and the cost to produce these diamonds from mine all the way when it reaches market to the major trading hubs, from a very high level, because I know this is a lot of the work you provide your clients, so you don't have to disclose too much. Who dictates the price of diamonds today? Because diamond pricing right now is, of course, as we know, is a very low, historic to what it was just a few years ago, post-COVID. Explain to the audience just for a supply chain overview of just the chain of custody and the costs associated with each of the major points of transformation.
Yeah, so so the diamond industry was always unique because it actually was, pedantically speaking, it was a monopoly, and De Beers would kind of probably argue that it wasn't technically a monopoly, but
now would you say it's still a monopoly?
No, it's probably more of like an oligopoly now. You probably have, given where the market is right now, and given how many independent players, miners have had difficulty. There's probably going to be three main, diamond producing, entities, if you will. It's going to be De Beers, it's going to be the Russians via Alrosa,
right,
and it's going to be the Angolans via Ndiama. So there's going to be, essentially three companies. But historically, the way the industry was structured was De Beers basically had a 3/4 to 85% control of global diamond supply, and they were able to adjust supply to demand and kind of keep prices kind of gradually increasing. So that kind of was the structure, and this has been studied in textbooks. Like if you open up an economics textbook, that's typically going to be the example and a case study that they would provide for a monopoly structure. Sure. The monopoly, if you will, was dismantled 25 years ago, and then you got all these independent players kind of came into the market, and De Beers still had a significant share, and the Russians had a significant share. But I would say maybe at the peak, maybe independents made as much as like 40% of the market share. So it kind of became more of like a supply-demand driven, market industry.
More like a democratized ecosystem.
Yeah, and like De Beers would have like a contract selling system where they would sell basically directly to clients. The clients would basically agree to pay whatever price they charge them if they get consistent supply, and they kind of trusted De Beers to be fair with the price. And then you had like the independents basically sold like an auction or tender. So it was really a pure supply-demand market for, say, the way the independents produced. And then I think De Beers would also look at the way that diamonds were sold, but by the independents, and kind of use that to kind of gauge where prices should be. So the market was completely different, 5-10 years ago than it was 25 years ago. And now we're kind of getting back to this point where a lot of the independents have been shaken out. So we're going to kind of get back to fewer larger players, and it's probably going to reduce volatility in diamond prices, and I think it's actually probably going to be supportive of the market. Just like from a business standpoint, the industry functioned much better 25 years ago than it has the last 5 years.
When, we look back at the structure of like where gold is today and how correlated it is to, some of these other industries. If diamonds had a similar infrastructure, you and I had a conversation offline about this, but thinking about diamonds as an alternative asset. Some people would say yes, it is. Some people would say no, it's not. If diamonds had a similar infrastructure as gold, with transparent pricing, institutional custody, pricing history, ETF launch, would your view of diamonds as an asset change?
Yeah, I think it's like you're trying to put like a square peg into a round hole. Yeah. If you're going to try to compare diamonds to, say, gold in that way, again, because the fungibility is what it is, and there's been, companies that have really made, legitimately good efforts to try to, create a more liquid system for, trading or investing diamonds. And I think there is something to that. I think if there was enough demand for it, I think a product like that could certainly take off. At the end of the day, there is that, that technical, challenge around fungibility. When I think of like diamond investment, so I would call it an asset, right? Again, if you buy a natural diamond and you want to sell it 10 years later, well, I'm just saying if you have it and you want to sell it, you're going to get something for it. You're probably going to get 40%, 50%. You might get 60% for it. If you hold it for 25 years, because of the inflation adjustment, you might get back what you paid for it, right? Yeah. So it does have some value. And I think that's a very important, component of the fundamentals of the product. And I think that's why historically people wanted, that's why I think a natural diamond was a good fit for an engagement ring, because it did have some, actual inherent, value to it. But I think when we start talking about investment, when I think of diamonds as an investment, I'm thinking of like the pinks and the fancy blues,
colors,
like the real high end. Like in my mind, like it's not really an investment diamond if you aren't spending like $100,000 or more. And I think once you start to buy diamonds that are that expensive, you really get the sophisticated investor, right, that really knows what they're doing, and they're hiring a gemologist or multiple gemologists to really make sure they know what they're getting.
Yeah.
So historically, that's when you think about like investment grade diamond, that's what I think about. But again, I think, but I also at the same time think of, a natural diamond as an asset,
A white
especially.
diamond.
Yeah, especially when you get into the larger, the rare,
3, 4, 5 carat
types.
plus.
Yeah, again, it's like it's tough to say, but if it's something that's very unique, I mean, for me, if I was to buy, a piece of diamond or jewelry as an investment, I would actually probably want something with the provenance.
Right.
That was owned by somebody famous, or royalty, or a diamond that had a story. Historically, I think those are the stones that have done the best. But the other problem with like these physical, commodities is that the price to transact them is actually very, very expensive. Mm-hmm. If you're going to sell it at auction, it's actually quite expensive. I mean, these days you can buy a share of Google or Apple for like literally no commission. They're commission free, and I can trade it as many times as I want. It's as liquid as I want to be. Yeah. With like, and even gold, like trying to trade physical, if you want to buy gold bullion, you're going to pay a premium to the spot market. Like there's more demand for bullion than there is, supply, and it trades at a premium. So like these are all things you have to think about. And I think that's why I look at diamonds as, an asset for like a more sophisticated investor. It's like, it's kind of like buying a vintage Ferrari in that way.
It is.
And you could do really well. And there have been people that have done well, but it's very illiquid and it's very expensive to transact. It's difficult to price it.
You have almost less than 1 to 3% of diamonds that are actually truly investment grade. But a few really good points that I want to go over you made was the lack of, again, like trading infrastructure for diamonds. So it's not a problem with the asset, it's just lack of infrastructure, perhaps. If you have a sophisticated investor who can spend $500,000 or $100,000 plus $500,000, $1 million, we look at fancy purple diamonds. I saw one of these diamond dealers a few weeks ago looking at a purple stone. It was maybe just under a carat.
Okay.
$800,000 a carat.
Yeah, it's probably an Argyle, and that mine stopped, ceased production a few years back. So they're limited, and they're going to get more limited. Those pinks and especially the reds and the purples. Yeah,
it's a whole different animal than white diamonds, and I think the everyday consumer maybe also doesn't know that these are available to buy or purchase or even out in the world. But also too, it's like, I think diamonds are such a special investment too, because if you look at like auction, like the vintage car buying too, it's like a lot of those are in-person transactions. You have to really be in the know. There's not a lot of transparency around also, what to buy, what not to buy. So it's an interesting to compare gold, all these other alternative assets, art, crypto, and seeing if diamonds do have an opportunity to fit in there.
And I also think it's worth noting, I mean, if you do buy a rare diamond or like a rare watch, like you can kind of wear it and enjoy it, right? And like that, I mean,
it's a wearable. It's
I mean, you're gonna have to. I mean, if you buy something really high end, you're gonna have to take out an insurance policy probably more often than not. Yeah. But you can wear it, right? Versus like some sort of other asset that is held in like a brokerage account or something like that. So
in a vault or in a safe somewhere.
Yeah. So I mean, that's kind of cool. And for some people, they actually wear it. I mean, so again, it's just it depends on the person.
Right. When we think about value, right? Because you have such a unique lens on the diamond industry because of this capital market and financial lens that you come in. When we look at what creates value in an asset, it could be a hard asset, it could be stocks. What actually creates that value for an everyday investor? Like what creates long-term value?
It really is just like it's supply demand. Like if people want it for whatever reason, like you could argue that gold shouldn't have any value. The reason it has value is because like humans have wanted it forever. And again, there are industrial applications to gold that make it valuable, and there's industrial applications to diamond that make it valuable. But I think at the end of the day, it's especially with a luxury product, it's really just there's demand for whatever reason. Pick the circumstance, you can kind of maybe explain why there's demand, but it's supply and demand. And with the luxury industry, they'll strategically curtail supply. If you think of like the high-end luxury companies that make handbags or shoes, right? I mean, watches, yeah, same thing. So, I mean, there were stories like 20 years ago where some of the high-end Swiss watchmakers were actually destroying the extra inventory they had, and they got, public scrutiny for it. Something to this industry where there is that balance between, supply and demand.
The rarity factor as well, and the
right, and that's the whole idea behind Bitcoin, for instance. Like there's a limited fixed number of Bitcoin that can be mined. I mean, with gold, I guess theoretically there's like a limited number of ounces of gold in the ground that are economic, to exploit. Same with diamonds, right? So
looking at lab-grown diamonds on the industry, I think that lab-grown diamonds has forced the industry to rethink the value also of natural diamonds. When lab-growns were first introduced, well before a lot of people realize, I want your take, your hot take on lab-grown diamonds to an audience of consumers today. What would you say, what's the biggest misconception about lab-grown diamonds, and what's a big misconception about natural diamonds?
Yeah, I think the industry in large has to be careful because diamond has been the cornerstone of like the fine jewelry luxury category.
Right,
and part of the reason it's the cornerstone because it's so rare and valuable. I mean, diamond extremely valuable.
One of the oldest stores of value.
Right, and on say a value to weight ratio, I mean, diamond is still significantly more expensive than gold, right? In that relative way, and that's after diamond prices are down 50% from the high-end gold prices have tripled the last 5 years, right? Yeah. So it's very important to remember that, and with lab-grown diamond, they're machine-made diamonds, they're made to order. Mm-hmm. It's a manufactured gemstone, and the supply and thus the value fundamentals are completely different. Mm-hmm. There's basically there's no limit to the amount that you could produce and the qualities you can produce them in. And that doesn't mean it's not a great product for the consumer that wants that. But I think once you start conflating the two, and there's been instances of retailers, telling consumers they're exactly the same, right? And you're silly for buying a natural diamond. And I think that's a very, very dangerous direction for the industry to go, because I think you create confusion, you erode, confidence in the larger product itself, and I think you turn consumers off. And that's been going on for multiple years now. And, just from not even make a moral judgment, but just from the standpoint of an analyst, I'm shocked that so much of the industry kind of went all in on lab-grown. I know why they did. It was because the margins are so high. Incredible, yeah. And then again, you could say, well, maybe, it's good for the consumer because it's more affordable. But it's like, I don't feel like they're doing that either, because they're paying $100 a carat for a top quality
and charging
lab-grown.
$5,000, $6,000.
Yeah, and so if you really want to do consumers a favor and give them a good value, then sell it for $140 and make a 40% or 50% profit. Like, that's still pretty good, right? Yeah. But they're trying to sell it like $1,000 price, but they're trying to sell at the same price point as natural diamond. I think that's just a very dangerous direction to go. And I kind of was hoping that it would have corrected by now, and I feel like we're still too far from where we need to be. Right. And it's just the short-term myopic, profit
when it
grab.
Comes to price correction, you mean? At the retail level?
Yeah, because so the price of wholesale, so now you can, the top producers, I'll talk to them, they'll tell me they're producing, top quality lab-grown diamond rough for, maybe $10 a carat, and you can just look in the wholesale market, they're wholesaling for, BS plus, below $100 a carat, and they're still being sold at price points that are comparable to natural diamonds to consumers. And I just think that's going to end badly. And again, I'm all for getting a consumer a nice 1 carat diamond for $150. That's great. But like when you're selling something for thousands of dollars, I think it's going to be
it's unethical.
A major problem down the line. And I think it damages the whole category. And I think it's going to take years to kind of get that consumer trust back and that consumer understanding of why, natural diamonds, are one of the most valuable things you could own. So these are these critical things that we're going through in the industry right now, and that's why there's multiple reasons why the larger diamond industry is kind of going through a lull. It's it kind of hasn't recovered. We got that the pandemic, then we got that huge boost with all the government's economic stimulus, and then that was great for a year or two, and then the last 3-4 years has just been kind of unwinding of that. There's a major luxury slowdown in China. Right. There's just geopolitical uncertainty and consumer hesitancy to spend on discretionary things, especially the lower end consumer. So there's like all these things going on that has kind of creating like these macro factors that are kind of making the industry difficult. And then, on a more micro level, the lab grown diamond has, kind of just, been compounding this challenge for the industry. So the industry has its work cut out for it.
I think that the industry is also kind of figuring out where to go next, like waiting for someone to hold the torch of light to lead and follow the industry kind of out of this slump that it's been in for a while. Something I wanted to bring up also is just the emotional, the emotional capacity that diamonds have. And, I think also as an outside first generation, also in the diamond business too, I think that we have a very unique perspective coming in the industry because it's more of a fresh take on it. And I think the diamond industry, one of the things that I fell in love with is just this perfect balance of art and science. And I think there's so much to learn about human nature in the diamond industry, from a collaboration standpoint to just seeing how globally connected the whole industry is. So I wanted to ask you, what's something you've learned about the diamond industry that's taught you about human nature that you brought outside of your work?
Yeah. Well, I've said this like many times, but I mean, I kind of get into the first question. I mean, the people in the industry, I find a very attractive group of people. I mean, they're just, especially when you get
the most unique individuals.
Yeah, but like when you get like on say the upstream, like the geologists, like the scientists, and then I think like with the jewelry designers and the artists downstream, like they're some of the most passionate people. They genuinely love this industry, and I think that's part of the reason it's been so resilient despite kind of the slowdown we're going through now. But I think it's like the passion. I find that so attractive. Like there's a genuineness to a lot of people
a
in this industry.
commitment to this industry.
It is. I mean, people that really love it, and I just think that's just a good rule for life. Like if you pick a career that you're really passionate about, your life's going to be probably going to be
success
pretty
will
good.
Follow you naturally.
And I think you're going to have success. And I think a lot of people kind of chase a prestigious job or a job that pays a high salary. Like a lot of times, like you'll hear like investment bankers, kind of
private equity
kind of
firms,
same sort of thing. And again, I think that's maybe a good to start a base if you kind of want financial cushion and kind of do whatever your ultimate life ambitions are after that. But I think it's a mistake not to pick a career that's something that you're passionate about. I just think it makes life easier.
It does. And I think that, going to like looking at these different segments of people in the industry, we have like this group, like the analysts, more of like the financial lens on the industry, and the journalists, and then lending a hand also just to the diamond. The diamond traders themselves are another bunch of people and personalities. And then you have the colored gemstone business, and then you have the manufacturers, and you have, again, like the artists and the designers and
it's
the
all
brands.
global. They're in all different parts of the world. They speak
It's
all different
so
languages. It's all
interconnected.
different religions. It's all different kind of economic backgrounds. It's a really diverse, and it's like the most diverse industry.
Yeah, and one of the things I have a lot of respect for is just the multi-generations that have like that power, the jewelry industry. I think that like we're talking 3-4 generations of family businesses that you don't see a lot. So that's one of the things that I have a lot of respect for. Yeah, I mean, I think following what you have passion about is really important. I think what you have and like the tremendous value you bring to the industry also is like, it's so critical because like you said, it's like we're at this like influx of the diamond industry, especially with like your mind kind of painting. It's like really helping paint a paveway and help legitimize, like make sense of what's happening.
Well, and I think you need advocates for an industry. Like if we get to the point where like the industry just shrinks so much and so many people go out of business and so many people kind of are forced to go to a different industry, like there's less people to advocate for the industry. But I feel like there's like a really good core group of people that are kind of like sticking around, and they probably aren't going to go anywhere. And again, I think that's kind of why it's been a resilient industry, and I think that's maybe something you can look to for comfort if you're in this industry and you're kind of concerned about the future.
Absolutely, or even outside the industry too, and you're looking to have the same impact on your industry. Okay, lightning round. Okay. Are you ready?
All right.
What's one trend in luxury or diamonds that most people are underestimating today?
I think just the customization. I think we're at a point now where the technology is so good. We're like the semi-custom. Maybe it doesn't need to be like a complete, one-off piece, but I think just being able to like the simplest, level of customization, like, picking a stone, like picking a setting that you like, or being able to kind of, maybe
design a band yourself.
I think we're really close to just being able to like, quickly, design something in AI and then, kind of have it produced, robotically.
Yeah,
I think custom jewelry is going to be so readily available, and I think people are going to love that.
Right. Yeah, I'm seeing also too, just on the consumer level, a desire for people don't want to go into a store and just buy something off the shelf. They want the experience of designing something that's one of one, made for them, and they have their tastes.
But it's weird because like there's two markets, because like there's people that just like want Cartier, right? They want a piece that looks like a Cartier piece, and you know, with jewelry, like the legacy brands are so strong, and like the look of those, you know, specific different brands are well known and just so desired. So that's kind of the opposite, which is interesting because like there's two segments of the industry in that way. But I really think like the custom side is gonna be where there's gonna be huge opportunity. I think it's gonna really create a lot more excitement. For consumers. I think it's gonna kind of be the next phase of growth.
Yeah, I think there's a lot of opportunity also for emerging brands and companies and startups. You know, more like the digital jewelry companies that are entering today.
Well, just like the internet lowered the bar. I mean, like for having a small business, like the internet opened up so many doors. If you do any kind of like publication or any kind of like, you know, research or consultancy, I mean, you have, you know, global distribution with the internet, which is very affordable. If like you want to do a podcast, you have global distribution, it's very affordable. So AI is going to do something similar where I agree it's going to allow people to be very entrepreneurial.
Right.
And I think it's just going to open up doors for people that otherwise wouldn't be able to start their own dream business. So I think that's like definitely there's so much negative around AI, and I get it, but I think there's like a lot of things to look forward to as well. I think it's really important to not just rely completely on it, though. I think like it's really important to like exercise
have some independent thinking.
Yeah, and I think you like literally have to like exercise your brain just like you have to exercise physically. I think you have to exercise mentally, and I think if you kind of just go too reliant,
you can't form thought or form a sentence.
I think it could be a problem. Yeah. And that's like, even for me, it's like when I write my research, I still write it by hand. And like part of it is,
really?
Oh yeah. I mean, well, not like by hand, like with pencil and paper, but I mean, like I'm not like putting in thoughts to AI and telling AI to write it for me. Like I'm still writing it. And like, I think
your original thought, you start there.
Absolutely. I think it's like really important to like be able to articulate yourself and
one of the missing,
writing,
most important skill sets today is like being able to write well and speak well.
Absolutely.
I think
if you're relying on AI to write for you, it's going to be very difficult to develop good speaking habits.
Absolutely.
So these are just like sort of things I'm thinking of. Like maybe that will sound ridiculous 50 years from now, but like I think that's important. But I think we don't need to. Life is so easy now. We don't need to run, but like you go go outside, and like the West Side Highway will be like, you know, the West Side Highway Trail will be full of people running, right?
Right.
And Central Park's full of people biking. So it's like we have to exercise, even though we don't really need to. We still exercise. So I think there's going to be a version of that mentally. So I guess that's my thought on that.
With when it comes to like some of the AI tools and platforms that you use,
and I think we're going to get to the point where there's going to be, you know, so many competing companies doing the same thing.
Eventually, just kind of would be.
Yeah, like I'm just like a general thought on like say where we are with like AI stocks right now. I think we're kind of getting towards like bubble territory. Not because these companies aren't going to make a ton of money or it's going to, you know, greatly increase productivity, but I think we're getting a little bit too bubbly with the sentiment, and I think there's so much money to be made.
Like the internet back in the late 90s.
Yeah, and it's not that bad. Like that was where you had like .coms that were making no money, were trading at these huge valuations. Like we aren't really at that point with AI yet, but there's like certain signs. Like the reality is there's so much money to be made in AI, it's going to lead to new companies emerging that are going to be competing. And I think there's going to be more price pressure quicker than maybe some are pricing in right now. And you just see, you know, companies like Corning, which make like fiber optic glass cables for data centers. And you're like, you know, some of these like, you know, legacy, you know, chip manufacturers, Micron, you know, SanDisk, you know, Intel, like the stocks are up like 1,000% like the last like 6 months. Like that's not normal. Like we're like definitely getting to like bubblish territory. So that's making me like a little bit nervous in the short term. And like there's like some of the big companies are like investing in like their own customers, which is kind of like not a great sign. We have some huge IPOs coming out. Like that's, you could kind of, if you go back and look historically, that you know, historically is maybe one of the signs that we're kind of getting near, you know, a near term top when these huge IPOs that are in the industry that's driving the rally finally come public. There's things like that I'm kind of looking at that are kind of causing me some pause. So I took, you know, some profits in my personal account with some of these big tech names for that reason. But in general, like I'm excited like about AI. I think there's gonna be like a lot of cool things that come from it. But I completely understand like younger people that are concerned. I think that's completely justified, and I'm sympathetic towards them.
Yeah. My next question for you is, looking at, for you personally, what what is a luxury for you today? It could be an item, it could be an experience.
Oh, it's definitely financial freedom. It's such an easy response for me. Yeah, like I'm like very, I think, financially conservative. So like not having debt to me is kind of a goal that I always wanted to achieve.
Right.
I think financial freedom, I think for me, is like the very obvious answer. That's the biggest luxury I think you could have. Yeah.
It gives you the opportunity to do and make decisions freely without being tied to something, which is yeah. In one word, what is luxury's most valuable asset today?
It's an interesting question. I mean, it depends on, I guess, how you frame that question. But I think if I'm a luxury company, I think it's like celebrities is probably the answer, and like influencers that are like driving their product, right? Like the fact that like people still want to wear like, you know, really nice high-end jewelry on a red carpet, and costume designers want jewelry to be prominently displayed in movies, and there's like all these like independent like influencers that are like pushing, in a lot of cases pushing products that they aren't even sponsored by, like jewelry products that they like. So I think that's extremely powerful. And just like look at Taylor Swift. It's like anytime she wears anything at all, it like almost instantly sells out, especially with like the fashion jewelry pieces. So I think depending on how you frame that question, I think for if you're looking at it from the standpoint of an industry stakeholder, it's the celebrities is probably there, is probably the answer there. Okay.
How about like from the perspective of maybe like a less of a company, maybe more of a modern consumer today? Like what's an important asset for them to have in?
So what I think I'm actually quite optimistic the longer term future for like natural valuable gemstones like natural diamonds. I think there's going to be a resurgence, and I think there's going to be a resurgence because we're getting more and more digital, right? Our lives are going to become so digital, and like the next thing is going to be virtual reality. Like Meta obviously made big investments the last probably 5 years ago, and they kind of pulled back a little bit. But I do think.
Have you interacted in the metaverse at all?
No, like I actually Apple had one. It's just a little bit too early, but we're going that direction. Absolutely, like the Google Glasses is like a real thing. So like we're just going to get so totally immersed in VR, digital world that I think people are going to crave natural things, and like I think a diamond or like a natural gemstone is like a great way to kind of carry a piece of nature around with you. You can like every time you look at your hand. It's like kind of maybe grounds you in a certain way. So I think there's a huge opportunity there for the industry.
You hit something important that I want to dive a little deeper is the fact that we are becoming so much more digital and so much more dependent on like efficiency and speed. And it's when you can have the time to like slow down and have that human connection. I think that's why the jewelry industry has succeeded so much, is because it's such an intimate business in so many ways, whether you're working B2B or also B2C, or even as a consumer, you're acquiring these products. It's a luxury to be able to collect things and capture a moment in time, and it's pieces that reflect you and can express you. But then it's also like just the experience of like going into the store for like the engagement ring process. So I think that's interesting.
Oh, the sentiment side of jewelry is so valuable. It's such an important thing.
One last question for you. Looking at you look at the financial value of an asset, but then you also look at the emotional value. Which would you argue is more powerful?
I would it depends on like how you frame it, but I mean with jewelry it's like the emotional value. It's like basically unlimited, and like you'll see that when like a certain diamond goes for sale at auction. If it was like a
blue
piece of jewelry or something that was on like Princess Diana, like it'll trade at 20 times what it would if it didn't have a provenance, right? So I think that kind of ties into what we're talking about here. So and that's just purely the emotional side of the value,
right?
And with jewelry, that's extremely valuable, and it could be almost unlimited to the upside. So
what someone will pay for that Princess Diana ring,
right?
Well, Paul, thank you so much for joining me this morning. I think this was such a treat, and I know that the audience is going to just have so many insights and takeaways from this. For people listening today, where is, they want to support your work, I'm going to link your website and everything in the description, but where's the best place for them to reach out to you after the show today?
Great. So everything's on my website, paulzimnisky.com. I have a regular podcast. I think I have, approaching 100 episodes now. So it kind of goes way back. Yeah, thanks. So
no one usually makes it that. A lot of people don't make it that far.
It took me multiple years, but it's fun. It's kind of like a side thing, but people like it. I like it. So just like I enjoy doing this. So that would be great. Check that out. I'm on X at Paul Zimnisky. I think I'm on LinkedIn, even though I don't use it a whole lot, but feel free to reach out.
Amazing. And what are you working on? Any exciting new projects over this year or next couple months?
There's just so much going. We're really at a critical point in the diamond industry right now. Like we're almost kind of like at a make or break kind of moment. I would argue, and there's like so much going up. With De Beers up for sale, and again, kind of the macroeconomic background. Like it seems like a lot of these catalysts are kind of coming together at once, and I think it's an important time. And again, I do think there's going to be a resurgence in the industry. Good luck picking at the exact time, but there's been so much diamond supply that's come offline the last 5 years. Like we went from 160 million carats to 95 million carats this year in less than a decade. Like that's a huge supply shock. There's a lot of like these, more micro factors that are happening in the industry, and I think it's a fun time to cover it.
We'll have to get together again in a couple months' time and reevaluate things and see how things have shifted. But
sounds good.
Paul, thank you so much.
Thank you for listening to Responsible Luxury. If you enjoyed this conversation, follow the podcast on Apple Podcasts and Spotify, and subscribe to Responsible Luxury YouTube channel to watch the full conversations. You can also join the conversation and connect with us on Instagram and LinkedIn, where we continue exploring the ideas, people, and forces shaping the future of luxury. And if this episode made you think differently about something, we would be so grateful if you would share it with someone you think would enjoy this conversation. I'm Lauren Petrovic. Thank you for listening, and I'll see you next time on Responsible Luxury.